It's about that time of day again, folks. Welcome back to your nightly newsletter, boys and girls. Joseph James here. It's already Monday, April the 18th, 2016. Boy, oh boy, that beautiful weekend just flew right by. We have another exciting newsletter in store for you tonight. We got crude, S&P, gold, and the euro. Oil markets are trying to fill a big gap down from last Friday after a little snafu at the OPEC meeting over the weekend. The E-mini markets are trying to keep up with crude. What's new there, right? Nothing new there. And of course, gold is range bound, and the euro is trying to get its act together and get back to its range highs tomorrow. We get a great newsletter in store for you guys. Before we jump into our charts, though, and start putting the plan together for tomorrow, though, I do want to remind you, the only place to watch the full-length version of our nightly newsletter video is on our trading blog here at sidewaysmarkets.com. If you're watching the video on our YouTube channel right now, don't forget to subscribe to the YouTube channel. There's a lot of stuff there that you won't find anywhere else. But if you want to see the whole full-length version of this newsletter, make sure you follow the link in the description of the YouTube video. Come over here and join us over at sidewaysmarkets.com for the full-length version. And while you're here, don't forget to grab a free pass to come out and join me in our trade room as a guest. Also, register for the mailing list. That way I'll send you an email every evening between 7 o'clock and 8 o'clock Eastern Time, Monday through Thursday evening, when that newsletter is ready to go. Don't forget also to download the charts you see me using in tonight's video. Right below the video tonight on the blog, you'll find a link there that says click here to download today's charts. That way you'll have those ready for you on your computer tomorrow. And of course, over on the right-hand side, you can learn more about what it means to be a member, read real member reviews, and don't forget, we, of course, always have someone standing by 24/7, 365 to give you guys answers to all your questions. Hope you had a great weekend out there. Boy, oh boy, busy weekend here in Los Angeles. The weather is changing. The beach is packed. We got work to do, though, here. Back to planet Earth. Before we jump into our charts, so let's take a look at the calendar for tomorrow, Tuesday, April the 19th. We've got housing starts at 8:30 a.m. Eastern Standard Time in the morning. Boy, it looks pretty empty here tomorrow. All we got is housing starts. We got Yellen on the calendar later on tonight. She's not expected to do much for this. Tomorrow in Germany, we get the ZEW, the ZEW, a business confidence index. Might be why gold and euro are kind of slippery and sideways right now, to look at the moment. So if you're trading in Europe, 5 a.m. tomorrow morning, you got the ZEW, right? The ZEW, a business confidence index out of Germany. That's likely what's that'll likely be the big market mover tomorrow morning. If you're here with me tomorrow morning, we'll be opening up our trade room at 8 o'clock Eastern Time, and we're looking at the housing starts number at 8:30. The housing market's been pretty robust over the past few quarters. In fact, they commented on that at the last FOMC meeting minutes. Funny thing was, Cleveland, Ohio, right? Love that city. Cleveland, Ohio was the only region that didn't have robust growth, according to the Fed meeting minutes. Kind of funny how that worked out. Bottom line, though, is I'm sure LeBron has something to say about that. We got 8:30 a.m. tomorrow morning. Housing starts. That's the only major news in the U.S. session for tomorrow. We got a week wide open in front of us, and we're looking forward to another great week with our students in our live trade room. Let's not waste any time here. First of all, we're going crude, S&P, gold, and then we'll wrap it up with the euro. I do want to start off by reminding you guys, the 18th of every 1 month, yes, again, that was the 18th. We usually start watching for rollover between the 16th and the 18th, right? But about the 18th every month, which of course is this evening, Monday evening, we're looking at rollover. We are now trading the crude oil 616 contract. And don't forget, it's really easy. Crude rolls over every 1 month. Gold rolls over every 2 months. And then you've got the E-minis and the euro, right? The FX futures every 3 months. We teach all that stuff, all the details of contract rollover. It's pretty much the big difference. There are ultimately two big differences between stocks and futures, right? One is rollover. What's the other one? The taxes. We save a ton of income every year because as futures traders, we're classified as commodity traders with the IRS, which means we got that nice 60-40 tax split when it comes to short-term capital gains. Did you know, for all you stock traders out there, you know that at the end of the year, we get a 1099 from our broker as futures traders? Yeah, right. Tell that to a stock trader and just watch their eyes just blow out of their head, right? Because anybody who trades stocks knows you literally need a degree from Harvard Business School to read a tax return when stocks are involved. Bottom line is a whole lot simpler when it comes to the money we make here. I won't go into details about that. Talk to a licensed CPA in your area. I am definitely not one, that's for sure. I can barely tie my shoes when it comes to my tax return. Bottom line, though, is we do have rollover. Right, contract rollover every 1 month on crude oil, and yeah, a 1099 at the end of the year. It's pretty darn simple. It's just like any other small business. So let's look at our technical clues here for the crude. Looking at a gap fill at Friday's close, we get a bull channel and a measured move. So this weekend we had a big meeting, right? The old production meeting, the whole production freeze meeting. Sans the Iranians, of course, right? Everybody was there besides Iran because they're busy getting themselves back on track. We can think about that whatever we want, but the reality was it was everybody there besides Iran, right? Okay, so the first headline we hear today is the first headline that came out the gate was absolutely nothing was accomplished. And it was seen as being a complete waste of time. that was the first headline I read this morning on the live news feeds. And of course, I have these somewhat expensive live news feeds that we keep on our trade room. So we hear all this stuff, right? We're not using, you can't rely on most news websites because there's too much advertising and they always try to make it sound like there's some linear cause and effect. The key to economic news is finding a news service that doesn't have a bias. Good luck. Bloomberg doesn't have it. CNN doesn't have it. Yahoo doesn't have it. It's almost impossible to find a free news service that doesn't sell advertising. If you sell advertising, you're worshiping a different god. You're not worshiping your readers. You're worshiping your advertising. Hello, they got to pay their bills somehow, right? So bottom line is I subscribe to a paid news service because then all I get is the news. I don't care what they think the news is saying. I just want to know what the news is. And you can't get that really anywhere else. Give me an email, jj@schooloftrade.com. If you need more information on that, I'd be happy to turn you guys on to a few different resources. Anyways, bottom line is this morning we hear nothing but just horrible stuff about what happened at this OPEC meeting. Apparently it was a complete political disaster and blah, 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 blah. And, well, as you can see, it didn't appear to ruin the day too badly. That resulted in a huge gap down. I mean, big, monster gap down. Now, a lot of traders sold into that gap, which you can see was completely the wrong decision. We always like to wait. When you see a gap, you got to wait with who takes control. Okay, you can't just sell into a big gap like that. Because remember, that big gap down is now that unfilled vacuum is going to try to suck that price right back up. Unless, of course, we get the strong follow-through. Once we saw the lack of follow-through right there, and right here, you pretty much knew this thing was pegged right back to fill that gap, right? So bottom line is big gap down over the weekend because of the OPEC production freeze meeting that for whatever you want to call it, I really don't care, right? But that's what caused the gap down. Good, bad, ugly, doesn't matter to us. All we know is there's a big old bullseye right now on Friday's close. Okay, that's the big deal right now. The gig is up, right? There's no question about it. Big old bullseye on Friday's close, 41.75. The next thing is this bull channel. The bull channel, of course, now tells us rotation, right? So we go from the high down to the low, up to the high, little double overshoot at the high, right? Little double overshoot at the high, back down to the low, up to the high, down to the low. Any guesses where we're trying to go next? Up to the high, right? Channel rotation. Now, we may end up getting an undershoot because, in my humble opinion, we're going to have to get through this Friday's close. We may end up seeing an undershoot into an overshoot and then back up. We'll talk about that in a moment. But the reality is that with a bull channel, we're expecting rotation. We're expecting rotation from low to high, high to low, low to high, high to low, and then back up to the channel high. So right now, you can expect there's a lot of buyers right now who are just loving this. They're able to buy this at the low, but they must get to it quickly because that, of course, pulls us into our third technical clue tonight, which is a measured move, right? Take the A up to the B, pulls back to the C, dot the I across the T, and there's your measured move. Oh, well, I'll be darned. It's right at Friday's close. That's interesting. Very interesting. So all of a sudden now, that 41.75 becomes I don't want to say a brick wall, but it becomes a pretty well insulated, sheetrock wall, right? It becomes a pretty decent size area of resistance. Whenever we see an area of resistance, remember, as the market approaches resistance, this is really, really important. As the market approaches resistance, we know that buyers will take profit, and we know there will be aggressive sellers. Okay, if you're in our chat room, I'm sure you guys know there are some quite aggressive traders in our chat room, right? Highly experienced, and they'll be looking to fade into this move. You got to really, really be careful, though, trying to sell in a bullish market. Just because there's resistance there does not mean that you can sell because it's a bullish market. Okay? Now, with that said, here are the basic ways that you want to buy around this resistance. In this case, it happens to be a measured move. Okay, here's scenario one. All right, here's scenario one. We go up into resistance. We break through it. We see a candle close above it. And then we use that resistance as support. Right? Now it becomes support on the opposite side. Scenario one is relatively easy. We get through it. We don't just poke our head through it. We close through it. And then we can use it as support on the opposite side. That goes for trend lines, it goes for moving averages, it goes for pretty much any level of support and resistance. Now, the next scenario is a little bit more challenging. Now we want to see is, oh, you're not going to let me go back again? Okay, I'll show you. Here's the next example. Okay, the first one obviously was the easy one. That's when we break, close above, and keep going, breakout, pullback. Now we have the hard one. Okay, this is the professional way to do it. Here we have now a break into the measured move. Into the resistance. Again, it could be a falling trend line. It could be a moving average. It doesn't matter. The bottom line is, what's the difficult part here? The difficult part is buyers don't want to buy at resistance. So you either need to get through it, pull the pullback, use it as support, or we need to, what we call, trap low, get away from that area of resistance. So look back in time. Look at some prior swings. Right? And that is going to basically allow buyers to get in at a cheaper price. So remember, the objective is I don't want to buy at resistance. Basically what you're saying is I don't want to buy the high price. You don't want to buy the high price. And I know it's basic. And I know people rag on me for being a basic, but I'm a teacher. And that's just the bottom line. You don't want to buy high. You want to buy low. It's simple supply and demand. It's just good business. So how do we buy low when it comes to technical analysis? Again, if we're at resistance, we don't want to buy smack into resistance. What do we want to do? Trap low. Trap low. Wait for price to break below a low, and then look to buy it there. Wait for price to break a prior low, and look to buy it there. Now, different traders will have different opinions on where they feel comfortable doing that. Because obviously, if you buy the first level, you've only got a little bit of room. If you buy the second level, right, now you get a lot more room. If you buy the third level, usually by now that becomes a bearish market. And so now you got to be careful. You got to wait for the sellers to fail and then go up. But you get the point, right? There's a lot more room. There's a lot more profit to make if you wait for a deeper trap low. So, once again, scenario one, we break through it, close above it, pull back, use it as support. The next scenario, of course, is the more professional way, which, of course, is where you're going to wait for a trap low and then make sure you can see where that resistance is. Don't buy the high, buy it at a low. Buy it at support. Buy it at a prior area of support. Okay? Now you guys are experts on what happens as we approach resistance. Now you can see, of course, more of the plan, right? Okay, so here we are. Here's what the bulls want to see. The bulls want to see channel rotation, buying at the low. Now, again, like I said earlier, we are at the low right now, so if the buyers don't get in now, they want to see rotation all the way up, and then where's it going next? Back to channel low. Oh, wouldn't that be amazing if we could get channel rotation all the way, again, low to high, high to low, low to high, high to low, low to high, and then back to the low of that channel, staying above 41.75. That's going to be a critical number for those bulls if it keeps going higher here. What else would work here? What else would work for the bulls? A breakout pullback above the measured move. Really, at this point, any breakout pullback, and remember, it's not just a wick. I don't want to see this.